What if I told you that the biggest stock market boom of our time could also become one of the biggest risks? AI is everywhere. Companies are using it, investors are chasing it, Wall Street is excited, tech stocks are rising, and everyone is asking the same question. Is artificial intelligence the future, or is this another bubble? History has seen this before. A new technology arrives. Investors get excited, prices explode, people believe the old rules no longer matter, then one day, reality arrives, and the market changes fast. So the question is simple. Are we witnessing the beginning of a new financial revolution, or the setup for a painful crash? Welcome to Next Gen Finance, where we break down money, markets, business, and financial psychology in the simplest way possible. Today, we're looking at one of the biggest questions in the market. Is the AI stock market bubble about to burst? This video is not investment advice. It is a breakdown of how market hype works, why AI stocks became so powerful, why investors are excited, and why some people are starting to worry. Markets love stories, and AI may be the biggest story of this generation. AI promises faster work, lower costs, smarter software, better automation, new products, new businesses, and possibly trillions of dollars in future value. That is why investors are excited, because if AI truly changes everything, then the companies leading AI could become extremely valuable. This is how market booms begin. A powerful idea captures attention. Money flows in, stock prices rise, more people notice, more money flows in, and the cycle continues. But every powerful story has one danger. Expectations can grow faster than reality. Every bubble has a pattern. First, there is a real innovation, then early investors make money. Then media attention grows. Then regular investors rush in, then prices rise even faster. Then people stop asking, what is this company worth? And they start asking, how high can it go? That is when danger begins. Because a bubble does not mean the technology is fake. The internet was real. Railroads were real. Electricity was real. But investors still created bubbles around them. Why? Because they overpaid for the future. The technology may be revolutionary, but the stock price can still become unrealistic. That is the key difference. AI can be real, and AI stocks can still be overvalued. AI could genuinely change business. Companies may use AI to reduce costs, automate customer service, analyze data, create content, write code, improve productivity, discover new medicines, optimize logistics, personalize advertising, and build new products. That is why the excitement is not random. There is real potential. Businesses want efficiency. Investors want growth. And AI promises both. If a company can use AI to make more money with fewer resources, that is powerful. So yes, AI may create huge winners, but the problem is that investors may start treating every AI-related company like a guaranteed winner. And that is where risk begins. A great company is not always a great investment. That sounds strange, but it is true. If a stock price becomes too expensive, even a strong company can disappoint investors, because the market does not only price what a company is today, it prices what people expect it to become. If expectations are extremely high, the company must deliver almost perfectly. More revenue, more profits, more growth, more AI adoption, more market share. And if anything goes wrong, the stock can fall. Not because the company's bad, but because expectations were too high. This is why valuation matters. In hype cycles, people often forget price. They only see potential. But investing is not just about finding the future. It's about not overpaying for it. During a gold rush, the people selling tools often make money. In the AI boom, chips, cloud infrastructure, data centers, and software platforms are the tools. That is why some companies became extremely important. AI needs computing power, it needs chips, it needs servers, it needs energy, it needs data centers, it needs software. So investors are not only buying AI apps, they are buying the companies that power AI. This can make sense. But again, the question is price. If everyone rushes into the same stocks, those stocks can become crowded. And when a trade becomes too crowded, even good news may not be enough. So what are the warning signs of an AI bubble? First, when people believe prices can only go up. Second, when companies add AI to their story just to attract investors. Third, when investors ignore profits. Fourth, when valuations become extreme. Fifth, when everyone talks about the same few stocks. Sixth, when fear of missing out becomes stronger than analysis. That is one of the most dangerous emotions in investing. FOMO. People see others making money and they rush in without understanding the risk. They do not want to miss the next big thing. But markets punish emotional decisions, especially when hype turns into disappointment. An AI bubble could burst for many reasons. Earnings could disappoint. AI adoption could be slower than expected. Companies could spend too much without clear profits. Competition could reduce margins. Regulation could increase costs. Interest rates could stay high. Investors could rotate into safer assets, or the market could simply realize that prices went too far. Bubbles do not always burst because the story dies. Sometimes they burst because the price got ahead of the story. That is important. AI may continue growing for years, but AI stocks could still correct sharply along the way. A good future does not guarantee a smooth ride. So, is the AI stock market bubble about to burst? The honest answer is, nobody knows for sure. AI is real. The opportunity is real. The productivity gains could be real, but market hype is also real. And when excitement becomes too extreme, risk grows. The smartest investors do not ignore AI, but they also do not blindly chase every AI stock. They ask better questions. What does this company actually earn? How strong is the business? Is the stock price reasonable? Is growth realistic? What happens if expectations fall? Because in the end, technology changes the world, but price decides, investment returns. If this video opened your eyes, subscribe to Next Gen Finance for more market breakdowns, money stories, and financial psychology. And remember, the future can be real, and the bubble can be real too.